Buying a new home can be one of the largest financial transactions most consumers face during their lifetime, primarily when it comes to securing the liability and the terms for the loan on that property. So the question is, how do you then get the best mortgage? How do you have the best experience? Well, we've condensed that complex answer into a three-step video, which is in the comment section down below. So we suggest that you or anyone you know that's looking to buy a home now or in the future watches that video when you have time. However, we're going to create 3 videos with step 1, 2, and 3 to cliff note that for you in this series. So step 1 on how to get the best mortgage. This is probably the most important part of this series on understanding the agency's relationship with the lenders in the country, in the United States. So lenders aren't really lenders the way you would think in the United States for the majority of loans that are done today. So whether it's a credit union, a bank, a non-bank, most are a pass-through to the agencies from the primary market to the secondary market that actually buy these loans or guarantee and insure these loans. So for an example, most people have heard of Fannie Mae and Freddie Mac that are under FHFA, which is a federal housing finance agency. Fannie and Freddie buy 100% of every conventional conforming, which means conforming with their guidelines, loans in the country for borrowers that fit that profile. So when you go to apply with a lender and they, basically pre-underwrite your loan, it's underwritten by a computer system called desktop underwriting. It takes the data points that Fannie and Freddie require the lender to follow to then sell that loan off and maybe retain servicing rights. So you might make your payment to that company. They don't actually own your loan. The same is similar for FHA and VA. So under the Federal Housing Administration or the VA for veterans that have served, or USDA under rural housing, Ginnie Mae is a government agency that basically insures or guarantees those loans on behalf of lenders. So what this means is lenders use these temporary warehouse lines to fund loans, such as if I was to go to a bank or an investor and I got a line of credit and I gave you a loan off my line of credit and I said, hey, I'm Andy's loans, I'm a direct lender. Well, clearly you wouldn't believe that, right? So that's essentially what every lender does in the country on these predominant loans. There are other loans that may be portfolioed by some of these banks or investors like jumbo and some other things, but the majority of loans done today, you have to look at the lender as a pass-through to the agency. So almost like a logo. So it's a sales thing. So if you don't shop for that mortgage and understand the relationship between you and the agency versus you and the lender, if you're looking for a Fannie Mae 30-year fixed loan, you've got to shop lenders for that same loan. At the end of the day, it's going to go to the same identical agency on the same identical product. The logo that's in between you and that agency loan is the most important thing to shop, meaning shop lenders. So in step 2 of this video series, we're going to talk about how you get connected with the right originator to know if you're dealing with a captive originator to the agencies or an independent fiduciary-minded originator.